Hey folks, if you're here, you're probably not just casually stumbling upon this video. You want to make some money and learn how to trade, right? Well, in today's video, I've got a step-by-step plan for you on how to become a savvy trader. Stick around until the end to find out all the truths. I'm gonna kick things off with some quick action on OTC charts when the official market is taking a breather. Starting with $5, we'll set up 3 indicators, CCI with a 20 period, RSI with a 7 period, and Williams R with a 14 period. I'm opening a 1-minute downward trade on the Aussie dollar / New Zealand dollar OTC pair. And since we're working with OTC charts, I won't keep throwing around this abbreviation all the time, okay? So right now I see the asset price hanging around resistance, and it should bounce back because, let's face it, prices can't just keep climbing forever. And meanwhile, our trade is closing successfully in the green. Moving on. Guys, I also remind you that I have a Telegram channel where we accelerate our deposits from $150 to $10,000. Trading sessions are held Monday to Friday, and the whole overclocking takes place in my VIP channel. Also, it's possible to conduct individual trading sessions for those who really want to make money. So all the details are in the Telegram, and the link for the Telegram channel is below in the description. Alright, back to the video. So next up, I'm opening a put option on the USD/CHF currency pair. Currently, the price dipped, rebounded to a resistance level, and is poised to continue its downward trend. So let's kick off some fundamental trading rules that every trader from newbies to seasoned pros should follow, okay? Rule number 1, manage your risks, all right? Money management in trading is crucial. You gotta control risks at all times because every trader faces downturns, and there's no such thing as 100% foolproof trading, all right? According to money management rules, each stake should be 1 to 5% of your deposit. Now we see our trade closing in the green. Let's keep analyzing. Now I'm entering a trade on the USD/CAD currency pair, betting it'll go down. And let's see why I made this call. Firstly, the price is currently at a resistance level, and looking at the 5-minute chart, I see previous holds at this level. So it seems like the level is holding its ground and can resist further upward movement. Also, crucially, my indicators show overbought conditions, alright? Indicating that the price should indeed drop because it's overbought. That's the scoop, and now let's continue our chat, okay? Rule number 2, keep your emotions in check. Perhaps one of the most important trading rules is controlling your own emotions. Only dive into trading with a cool head in a calm state, okay? Pausing because our option is closing in the green. Let's move on. Now I'll open a put option on the NZD/USD currency pair. In the previous case, the price bounded nicely from the resistance level, but now it's sitting at a support area and it's going to break through. And why, you ask? Why did the price bounce off a strong level in the previous case, but it can't from this one? Well, let me explain. There's a strong downward movement marked by large bearish candles, alright? And the price can't just abruptly stop and rebound. It can't. Reversals happen gradually, and in this case, sellers are geared up to push the price down further. So considering these facts, I opened a put option. Hey friends, another profitable trade in the bag. Let's keep it rolling. So on the next currency pair, Euro and Ruble, I'm opening a call option. Here's the situation. So the price dropped, hit a support level, and has already started forming a green candle, okay? And this is an early signal that the price is about to turn around. I also noticed that the indicator readings are in oversold territory, meaning the price doesn't have the strength to keep going down and should rebound. And in the meantime, let's continue our conversation. So rule number 3, take a break. Yep, you heard it right, take a break. Believe me, giving yourself a break is crucial, especially in trading. It's an unspoken rule. Think about it. How many mistakes can a tired trader make? I'll pause briefly. Let's celebrate the successful closure of the option and move on to clean out the broker. Now there's a fantastic setup on the euro and British pound currency pair, and I'm opening a downward trade, and it is straightforward here. The price previously rose to a resistance level, then pulled back from it and is now making another approach. And stops were observed at this level before, so it should work well again, I think. And now let's continue our chat, alright? Rule number 4, analyze, don't guess. No need to try and guess where the price is headed. Analyze, okay? Keep an eye on major market trends, learn to understand their causes and how long they're likely to dominate, okay? And to do this, you've got to occasionally read, yes, actually read analysis and have a basic understanding of what's happening in the world. Right, a quick pause, our trade is closing in the green and let's move on. So I'll open a put option on the euro/Swiss franc currency pair. And let me explain the entry logic, all right? The price has been hovering around a support level and I've been waiting for a reaction. Afterward, I noticed that the price is starting to break this level, forming a significant red candle, which is indicating that the price will continue to drop towards the next level. And I think it's all clear. We can get back to our conversation. So rule 5, okay? Choose your assets wisely. Don't rush into analyzing a bunch of currency pairs. Start with 2 to 3, especially if you've got only one monitor. And about assets, okay? I often notice newbies fancying themselves pros and picking exotic options for analysis. Dear friends, our trade is closing in the green and let's keep stirring up this excitement. So on the USD/CAD currency pair, I'm opening a 1-minute put option. Here's the situation. The price is moving in a downtrend, approaching a support level. It has formed confident red candles, indicating that the price is set to move down and won't bounce back anytime soon. And back to our conversation. Next, I will be telling you about the pros and cons of trading. Let's not keep you waiting, let's just dive in, all right? Starting with the cons, losing money. The possibility of losing money is, of course, the main downside of trading. It can be incredibly profitable. You can make up to an 85% profit on a single bet, but at the same time, you could lose 100% of your invested capital. All right, friends, attention to the chart. The option is closing in the green. Another successful trade in the bag. Next, I'm making a call option for 1 minute on the GBP/JPY currency pair. The chart has descended to a support level, not with large red candles, but with a slight pullback, indicating that the price doesn't intend to break this level and will reverse from it shortly. This area has worked well before, and this time is no exception. Also, the readings of the 3 indicators are in oversold territory and are ready to move upward. These facts allowed me to conduct a proper analysis. And friends, please write in the comments which indicators you use in your trading and how many profitable trades you have per session. Also, don't forget to subscribe to the channel, okay? Hit the like button to push the video upwards in the recommendations. And now, let's celebrate the successful closing of the trade. We've already earned over $1,000. Amazing, let's keep going. I'll open a call option on the CHF/NOK currency pair. The chart was moving down and the previous candle was quite large, but there's a but, okay? The last candle started to pull back in the last seconds of closing, indicating potential upward movement. Also, the chart is currently at a reliable support level where numerous reversals occurred before, and additionally 3 indicators are in the oversold territory and the price doesn't have the strength to continue moving down, so it needs to pull back, especially from the support level. Okay, back to our conversation. Another significant downside of trading is what I call Grail syndrome, okay, and the reluctance of newcomers to learn. Okay, so meanwhile our option confidently closes in the green. Let's move on. I'll open an upward trade on the CHF/JPY currency pair. Here I see that the price has room to rise to the next resistance level because the trend is upward. And also the indicators are pointing upward, which strengthens my analysis. Let's get back to our conversation, shall we? So stress is another significant downside of trading. Yes, we all know that you can and should fight stress, all right? But let's be honest, who's really doing it? Nobody, of course. Meanwhile, it's crucial for a trader to take care of both their nerves and health. Let's talk about the pros of trading now, okay? So the first and most significant pro of trading is, of course, the profit percentage, which is quite high. I'll pause for a minute because our trade closes successfully in the green. Let's move on. So I'll open a put option on the AUD/USD currency pair. The price is moving in a downtrend and it has room to continue moving down. Also, the readings of 3 indicators are pointing downward, reinforcing my analysis. Let's continue the conversation. So the relatively low initial capital is definitely an advantage of trading, all right? For example, a deposit of $100 to $200 is enough to implement sound risk management and control all risks. And speaking of risks, you only risk the amount you place the bet on, no more, no less. Another trading advantage is mobility and accessibility. You can make trades from your phone, tablet, or computer, and iron might be the only exception. Attention to the screen, let's record the successful closing of the trade. We've earned $870, an excellent result. Let's continue. So I spotted an excellent situation for a setup on the Euro/CHF currency pair. I opened a put option and now to analysis. The price was slowly rising towards the resistance level and now it will start its reversal. And you might ask, why did I decide so? Because there were previous stops at the level and it held them. Now it should do the same. And it must hold because the readings of 3 indicators are in the overbought zone, all right? Indicating that the price doesn't have the strength to continue rising. So it should start moving on. Moving down. Now let's continue the conversation. And wrapping up our list of trading pros is, of course, the question of education. So the great thing about trading is that you can learn it. And all the information is available on the internet, basically. Okay, now let's record the successful closing of the trade. And let's continue. Now I'll open a call option on the USD/JPY currency pair. Let me explain the entry logic. The price previously rose, then entered a sideways movement, and is now moving from level to level. And since the price is starting to rebound from the support level, I opened a call option instead of a put option. If there were consecutive large red candles, I would have considered a different scenario. However, in this situation, the price approached the level hesitantly, slightly pulling back, indicating that it should start rising, bouncing off the level. And I want to talk about one of the most interesting topics, myths in trading. And I'll tell you about it later. Let's take a brief break to record the successful closing of the trade. The profit was $910. Excellent. Let's continue the analysis. So I'm opening a call option on the GBP/JPY currency pair. I'll explain the entry. The price was moving in a downward trend, meaning downward, and now the price has slowed down its pace and is not descending too actively. It has stalled, all right? So I concluded from this that the chart has hit a support level from which it will rebound upwards. And my analysis is supported by the readings of 3 indicators, which are coming out of the oversold zone, okay? This is a confident signal. Let's return to the conversation. So myth number 1, making money in trading is super easy. This myth is loved by dishonest brokers and scammers. They claim that all you need to do is press a button and money will flow like a river. Unfortunately, it's not true. I'll pause for a moment. Let's welcome our trade with open arms. We earned $920 and excellent results. Let's keep going. Alright friends, I'm opening a call option on the Euro/USD currency pair. And now let's analyze the situation in detail. Alright? The price has previously declined and is at a support level. And it might seem like I should enter a put option because the recent red candles are quite large, suggestion that the price should go down. However, that's not the case. Firstly, the chart is now near a support level that has worked well in the past, holding back the price movement, and it should do so now. Secondly, look at the indicators. The readings are coming out of the oversold zone, which only strengthens my analysis for further price growth. Let's get back to the trade, lock in the profit, and move on. I'll open a call option on the AUD/USD currency pair. Here, everything is simple, like 2 + 2. The price is moving sideways from level to level, okay? And now it is in the support area. I opened a call option from it, and that's it. Very simple. Let's get back to the conversation. Believe me, mindlessly pressing buttons will only lead to losing money, alright? Hence the sad statistics. About 90% of the traders lose their deposits. So, if you don't want to be among the losers, start learning, okay? Myth number 2. It doesn't matter which broker you trade with, the main thing is that they facilitate withdrawals. I often hear similar reasoning from beginners. Attention to the chart, our option closes successfully in the positive. Now let's not stop and move on. Now I'm opening a put option on the AUD/CHF currency pair. The price is moving upwards, but it cannot continuously move in the same direction. The price moves in a wave-like pattern, up, down, and so on. Therefore, it should pull back, meaning change its direction, and the chart is currently near a resistance level from which it will turn around. The level has worked well before and will not be an exception now. And another factor, take a close look at the indicators, okay? So they are all in the overbought zone and are already starting to turn around. Alright, dear friends, our trade closes successfully in the positive. Let's keep going. So in the current situation, I see an excellent opportunity to work on the AUD/NZD currency pair. I observe that the price has broken through the support level and is now returning to it. And listen carefully, you guys. When the chart returns to the broken level, it is called a retest, okay? So in such cases, after the price approaches the level again, there is a reversal in the price of the asset and a movement in the direction of the breakout. That's the situation now, so I entered a put option. And friends, please write in the comments if you understand everything I explain or if you need a more detailed analysis of each situation, okay? This is very important because the quality of the material you understand is my top priority, alright? Come here, my sweet sugar. A confident closing of the trade. Let's keep going. So on the NZD/USD currency pair, I'm opening a put option. It's the same story here, basically. The price has broken through the support level and it is retesting it. Now there will be a price reversal downwards. No magic, just a well thought out, correct analysis. So let's continue our conversation, shall we? Myth number 3. In trading, someone might just give away money. For some reason, some particularly gifted traders are convinced that someone in trading will definitely give them money. And I don't know where people get such confidence. Maybe they're so used to being given money on the internet that they take it for granted. However, it's complete nonsense, alright? Believe me, no one will give you money in this field just like that. Another profitable trade in our piggy bank. Let's go further. Alright, so I opened a call option on the JBP/JPY currency pair. The price has previously declined, now it has moved sideways and is moving from level to level. And taking advantage of the situation, I opened a call option from the support level upward. So returning to the conversation. Some traders believe in the magical money button, by pressing which you can break in money without doing anything. Well, why not? An interesting prospect, sitting on the couch, scratching your belly, and a magical program earns money for you. How great. And second, some traders believe in the reality of demo money. Some genuinely think that if a person actually deposited $500 into their account, then they are real. It's such a fantastic nonsense that it's frightening. Okay, I'll pause. Let's clock in the profit of $920 and move on. So investing $1,000 in a trade on the AUD/USD pair. The price is moving sideways between support and resistance levels. Currently, it's at the support level, and I expect it to go up towards the resistance level. 3 indicators are also in the oversold zone, supporting the idea that the price should increase after such conditions. It's just a logical choice. Now, I would like to talk about what a trader should be made of, the basics of this profession, alright? Listen carefully and remember. The first quality that forms the basis of success for any trader is emotional stability, okay? Trading is a somewhat stressful activity. Emotions can have a negative impact on results. Good news, our trade is in profit. Let's move on. So on the AUD/CHF pair, I've opened a trade to go down. And the situation is simple. The price broke the support level and is now retesting it. After the retest, it should reverse and move in the breakout direction, meaning down. And let's continue our discussion. So, fears, excitement, and other harmful things turn successful work into a simple deposit drain. Alright, so my advice to you is to learn to take risks, but also learn to stop in time. Actually, we've come to the main, in my opinion, quality, because the desire and, most importantly, the willingness to learn are the basics of the trader's profession. Many, upon hearing that they need to learn, start to back off and find excuses not to. Meanwhile, our trade is closed in a profit of $900. Fantastic, let's keep going. Now, a very interesting situation on the AUD and CAD pair. I'm opening a trade to go up. Why? Although red candles formed, indicating potential downward movement, the price is at a reliable support level. Also, indicators show oversold conditions, suggesting a potential upward reversal. And back to the conversation. And by the way, successful people are rarely lazy, okay? However, this total laziness and unwillingness to do anything on their own have simply enslaved people lately. So be prepared to learn constantly. It's normal practice. And I would like to raise an essential question about risks in trading. Essentially, there are only 2 risks: losing money and causing stress to the body. And let's celebrate a successful option closing, and now let's go and challenge the broker. Opening an up trade on the Euro and CHF pair. The price broke at the resistance level and is now retesting it. After the retest, it should reverse and move upwards. So let's continue talking. The first is trading risks. Of course, there is no risk-free trading strategy, alright? There is always a chance of encountering negatives. However, traders usually get acquainted with negatives due to their own foolishness, pardon my frankness. And why? Because they mindlessly click on buttons, trade based on a single indicator, or prefer not to engage their brains, hoping for luck. Friends, this hoping for luck significantly increases your risks of losing your deposit in trading, alright? And watch the screen, we've successfully closed the trade. Let's move on. So spotted an opportunity on the AUD/USD pair, opened an up button, The price approached a support level that has proven itself before and should do so again now. Hoping for the best. Back to our talk. So second in significance, I would highlight the risks of falling victim to a fraudulent broker. I would outline 3 main ways brokers deceive. Manipulating quotes. Each of us has lost money at least once because the platform suddenly changed quotes at the last seconds. And the second is inability to withdraw funds. Unfortunately, unregulated brokers posing high risks often do not allow withdrawal. Dear friends, attention to the screen. Our trade closes in profit. Moving on. So opening a down trade on the AUD/CAD pair. I noticed the price oscillating near the resistance level and started moving downward. I opened a trade on this movement, and back to the topic of our talk. Another very important risk faced by all novice traders is falling victim to scams. Specifically, the risks of falling for scammers are relevant for traders who do not want to work themselves but seek a kind of philosopher's stone, right? A magical methodology that will earn money for them. So unfortunately, scammers often take advantage of laziness and greed, offering everyone a risk-free trading income with 100% guarantees and other nonsense. So let's lock in a successful option closing and let's continue raking in the money. So opening an up trade on the USD/CHF pair, the price broke the resistance level and is retesting it. After the retest, it should reverse and move in the direction of the breakout, meaning upwards. And let's keep our conversation going. So the last risks in trading that I will talk about are emotional risks, so to speak. I have repeatedly mentioned how crucial psychology is for traders, alright? How emotions sometimes drag calm and reasonable people into drawdowns. So how to distinguish fraud in trading? I will tell you about 10 main signs that almost all scams possess, and I suggest discussing key phrases with which scammers manipulate our consciousness. Attention to the chart, our trade is closing in profit. Moving on. So opening an up trade on the USD/CAD pair, the price was trending down and is now at a support level that worked well a bit earlier. And based on this, I opened a trade. Let's continue. So first, a one-day website. Since our assumed scam is located on the internet, we will evaluate it as a regular online resource, all right? Checking this is straightforward. So if you see a hastily made design in the slapdash style, letters missing, lines flying, everything crooked and untidy, know that you are dealing with a scam that was created hastily just to make money without any plans for long-term operation, okay? So our trade is closing in profit and let's continue analyzing. So opening a down trade on the JBP/JPY currency pair, I see a situation where the price has risen and approached a resistance level where previous price reversals occurred. Also, I noticed that the indicators are in the overbought zone and have started crossing this area from top to bottom, confirming my analysis, which means the price should reverse. All right, let's keep the conversation going, right? So another important point in website analysis is to check how many pages are on the considered resource, all right? If there are fewer than 10 pages with text, then it's not even a website but a regular landing page created to attract users through advertising, okay? All right, friends, our trade is closing in profit. Let's move on. So on the AUD/USD currency pair, I opened an up option. The price has been declining and is currently at a support level where I anticipate a reversal upward. So let's get back to our conversation. The second important point in identifying fraud in trading is the abundance of advertising, okay? If you learn about a certain earning method by clicking on a banner or an advertisement, with a 99% probability you've fallen for scammers. And another crucial point, not entirely on the topic, but it's still relevant. If someone out of nowhere got your data, meaning phone and email, and starts insistently selling something to you, immediately categorize the sender as spam, alright? So, dear friends, our deal is successfully closing in a plus. Let's summarize the results of our auction. Guys, we've earned $21,063.58 in today's session. I'm in shock. This is just mind-blowing, all right? Thank you very much for watching. Please check out my other videos on my channel, and I will see you in the next one. Bye-bye.